Um, One of the things I recently heard you talk about on your show, your real estate show, the Not Your Average Investor Real Estate Show, which I think everyone should check out. Always a lot of just good, consistent information coming out of that. And one of the things that stood out recently that I was hearing you talk about was the importance of a long-term mindset when it comes to real estate investing. You said it earlier in this interview, talking about people picking their team and having a 10 to 20-year plan. Can you talk to us a little bit about the importance and or the benefit of a long-term mindset when it comes to real estate investing?
Yeah, absolutely. I think it is so critical. It is so clear that the way to win in rental property investing is to buy and hold for a full market cycle. And it's because you have 5 ways that real estate pays you, but you need to hold on for a full market cycle in order to count on all of those 5 ways. What I mean by that is you've got positive cash flow is one, right? Think about the amount that's left over after your resident pays the rent every single month minus the expenses that you have. There's your positive cash flow. You've got your tax savings. So you get incredible tax savings for being in this asset class that you don't get in the stock market or in other asset classes. So you got tax savings. You got principal pay down, which is your resident paying your loan down for you, right? How cool is that? Somebody else is paying off your debt for you. Well, that's one of the reasons that we want to make sure we treat our residents like gold, right? Then you've got home price appreciation, which now especially is getting the storylines with we've had outside home price appreciation, especially over the last couple of years. And the fifth profit center is inflation hedging, which is getting a lot of headlines now as well. There's no better asset class to be in than a hard asset like real estate, where your rents and your prices tend to go up in inflationary times. So you've got these 5 profit centers, but all 5 profit centers get so much better with time. And if you look in the span of the stock market and you look over the span of real estate and you go and you say, well, listen, I could have spent my money and held on to it for 20 years, and I could have spent that money in real estate, or I could have spent that money in the stock market, which would have performed better? Every single 20-year segment of time, if you buy real estate, hold on to it for 20 years, and you use smart debt, every single time real estate wins. Every single time. But the thing is, you need to be buying and holding for a long time. So buying and holding for a long time sounds maybe like it's hard to do, but think about what people do in the stock market. You put your money in the stock market, you plan to keep it there for a long period of time. It's probably going to be there for 20 years, right? It may not be in that stock or this stock or whatnot, but you're going to be in the market for a long time. So just adopt that same mentality of buying and holding and being in the real estate market for 20 years. You're going to win. And that's why most wealthy folks have real estate in their portfolio. It has been proven to invest in an asset like this, which is a critical need for the individual. It's also a critical need for the government to get it right, that you can kind of ride that wave. And it's just so clear when you actually look at the numbers that if you don't have that long-term mindset, you're really potentially missing out on something that can create a lot of wealth for you and your family, and also create stability and consistency, which I think we need more of in all of our asset classes.
Some good information.